Hello guys, Randy back again here with a crazy video. Okay guys, today what I'm going to talk about is how not to rush into trades. Okay, this is for people that are struggling, they get into trades too early and then market reverses, hit the stop loss, and then they sit there and wonder, oh, what happened. Okay, so this is hopefully this is going to help you a lot. Okay, so in order for you not to rush into trades, I feel like you need to understand these three concepts. Okay, so the first one is every move is a trend of its own. Okay, that's number one. Number two, change of direction occurs when the opposition shows up. Okay, and then number three, you need to identify the point of anxiety. Okay, you need to identify at which point when the market gets to your point of interest, at which point does your heart starts to race? You get this anxiety, you start to feel fear of missing out, feeling like maybe you might be late, maybe the market is leaving you, like how to deal with all of that. Okay, so now let me cover number one. Okay, every move is a trend on its own. Okay, so look at this illustration here on this chart. Okay, you can clearly see that this is a downtrend, right? Market is making lower low, lower highs, lower low, lower highs, lower low. Okay, so each of these moves are a trend on their own. Okay, so if I go here and do this, okay, now you can clearly see that, you see, like I just showed you this. Okay, so that's the swing low, and then that swing low in the lower time frame is a downtrend. Okay, and then that's the pullback, and this pullback in the lower time frame is also it's an uptrend. Okay, so it's very crucial to understand this. Okay, so now change of direction occurs when the opposition shows up. Okay, what that simply means is this. Let me zoom in real quick. What that simply means is this. Okay, when you are in a downtrend, look at this. Market is making lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, lower high, and then we fail to make a lower low. This is now a lower high. Okay, and then boom, the buyers broke this cycle right here. Okay, the buyers just broke this buying cycle. Okay, so what does that mean? That means that the opposition has now stepped in. Okay, so we came from a selling market, and then this break here indicates that buyers are now in. They are in control of this market. Okay, so it's very crucial to understand this. Okay, and then identify the point of anxiety that I'm going to show you on the chart. Okay, so now let me jump on the chart real quick. Okay, let me go to my MetaTrader 4, MetaTrader 5. Okay, MetaTrader 5 real quick. Okay, cool. So I'm going to make it quick. Okay, so look at this, guys. Okay, so we can clearly see that this move here is a downtrend. Okay, but I'm not going to focus on this. So I'm waiting for something here, for an opportunity here. So let me just clear this chart real quick. Plain. Okay, boom. Make quick analysis. Okay, guys, I trade the smart money concept. You can learn that in the group, in my free Discord group, or you can do your own researches on YouTube. But I also have a boot camp coming up in 2 weeks. It's only going to be up for I'm only charging $20 on it. I'm going to actually break down all of these concepts. That's if you want to learn from me. But if you want to learn on your own, like do your own researches on YouTube, and it's you will find it. Okay, so we got to break a structure right here. Okay, then we have that order block right there, and then I got my 50% line. Okay, this is an opportunity that happened yesterday. Okay, so boom, you can clearly see that on the H4, this is a downtrend, right? Okay, and then if we go to M30, for instance, you can clearly see that downtrend now, it has been magnified. You see that swing down on the higher time frame on the H4 is a downtrend. Lower low, lower highs, lower low, lower highs, lower low, and then we had a little bit of a uptrend here, which is a pullback, and then we carried on. Lower low, lower highs, lower low, a little bit of uptrend, went down, a little bit of uptrend, lower low, lower high, lower low, lower low highs. Okay, so now we're gonna focus on this move right here. Okay, so now look at this. Change of direction occurs when the opposition shows up. Okay, so now look at this. After you find your order block, you got your impulse, and then you got your mitigation right here. Okay. So now the market is mitigating. Okay. Here it did not hit the 50% line. Okay. So I'm only going to focus on the 50%. I would have done this as well, but I just don't want to waste time. I like to make my YouTube videos very short and straight to the point. Okay. So then boom, we hit that 50% line. So now I'm going to show you what I mean by the change of direction occurs when the opposition shows up. Okay. So now we're on the M30 time frame. Let me jump down to M15 real quick. Okay. What I mean by that is this. Okay. As the market is mitigating, look at how the market is mitigating. It's mitigating in a uptrending fashion. Okay. Because we have our initial low. Okay. We have our initial low right here. And we have this low. And we have this low. Market is failing to break all of these lows. Okay. Then we had this low right here. Okay. So after market hit the 50% line, they gave us a little high, and then they broke this low. Okay. What does that show you? That indicates that this candle right here that broke this low indicates that sellers are now starting to step in the market. Okay. So when you see something like this, that's when you start to get interested. Like you can actually enter here if you want to. Okay, this could be your first entry, but then remember, if you enter like this, you are susceptible to see a pullback. Okay, to see a large pullback like this before the market falls. Okay, so you can enter here, but the market hasn't fully, like, the sellers are not fully settled. They just showed interest that, okay, they are interested to buy the market from this price, but they are not fully committed. Okay, how to know that they committed? That's something I'm going to cover in my boot camp. So I'm not really going to give you all of my gems like that. Okay, so they're not fully committed. Okay, boom, they dropped. Okay, and then they decided to go all the way back up. Okay, where they going back to? They're going back up to the candle that initiated that break. Okay, that initiated this break. Okay, boom, and then boom, they came back to that candle. And when they come back to that candle, you can get an engulfing like this. You can enter as well. Okay, you can enter. Stop loss just above here. Your TP could be this point low right here. Okay, but for precise entries, you can go to the lower time frame, and that's also something I'm going to cover in my boot camp. Okay, so that's example number one. And then now identify your point of anxiety. What do I mean by that? Let me do something like this. Okay, I guarantee you, probably like 80 to 90% of you guys watching this video, when you see something like this, when price gets to your point of interest, when you see something like this, that's when your anxiety starts to kick in. When you see this red candle right, you're like, oh man, the sellers are in. Some people will buy here straight up. Okay, straight up they'll buy it. That's when the anxiety kick in. Like, no, maybe if I don't take this red candle, the market will just decide to drop. But what are you rushing for? Like, the market hasn't fully settled. As you can see, buyers are still in here. I mean, sellers have not fully committed. Like, you can't trust the market but just this one candle. You can't trust the market to sell by just this one candle. Like, you need to wait for, like, proper structure, something you understand before you buy. Like, if you're trading like this is gambling. You know, like, don't gamble, man. Like, this is a serious business. Like, you need to, like, the trade needs to tick all of your boxes before you can even consider it an entry. Okay, so when you enter like this, and then price does something like this, plays around with you, and when you enter like this, I guarantee you your stop loss is probably somewhere here. Okay, let's not lie to ourselves. Your stop loss right here, because like, oh man, I'm trying to catch that sniper entry. I don't want the market to pull back by a slight pip, and they do this to knock you off. Now your psychology is already tested. Okay, and you're like, oh man, snap, I entered too early. What do I do? Then you see this red candle again, you enter. Okay, you enter. You're like, oh no, they closed above and then they closed below. Okay, let me enter. And you enter. Okay, boom. Price respect your entry. Okay, they respect your entry. But then by this time, your psychology is already tested. You know, like, now you just want to make back the money that you just lost here. Okay, you just want to make it back, and then boom, you see price going in your direction like this, and you're like, oh man, I'm finally making money. My target is here. My target is here. So I'm just gonna wait for price to give me all the money that I want to make. Okay, then boom, let mitigate like this, and then now here you start to question yourself. Now what's happening? Should I close? Should I stay in? Should I close? You're like, okay, maybe they might just drop after this, because I see because I see these two, because I see the price is actually respecting this level, so it's gonna drop. Okay, then boom, then they do something like this. That's when you're like, ah, no, hell no, I'm closing. Boom. When this green candle comes shows up, you're gonna close. Then boom, the next candle red, and then look what happened. Then they give you all of that profit that you were looking for. But now, how did you sabotage yourself? You sabotage yourself by trusting this move right here. Okay, this is how you sabotage yourself. But instead of you waiting for a structure, you know, something you understand. Okay, boom, sellers are in. Okay, cool. Now they have to come back. They came back. Okay, cool. Take the red candle entry. You understand? So if you had done it like that, you could have saved yourself from this psychological struggle. So you understand, guys? Like there's two types of traders: the traders that trade like this, and traders that trade that way to see something they understand before they can even consider this to be a trade. You understand? So that's your area of anxiety. Like avoid stuff like this. Avoid stuff like this. Let me just try to give you one more example, and then I'll be done on this video. Okay, so let me probably use this example right here on V75. Okay. And also that V101S was a very complex example. There are a lot of simple ones, okay? Simple ones. No, actually, wait. V10. I think V10 did something very interesting. No, V10 1S, I think. No, V100 1S, I think. What was it again? Sorry, guys. Oh, crap. It was V10. Nope. V25, maybe? Yes, it was V25. Okay. So look what happened. This is like a simple example, okay? You're going to focus on yesterday. I think yesterday I had this order block right here. Okay. I had this order block. Here I placed my 50% line. Okay, then I went to the M15 time frame real quick. Okay, cool. So M15 time frame, that's the impulse, and then that's the mitigation. Okay, on the mitigation, you see here that we had a sign of sellers. Okay, like here's another example again that for people that your area of anxiety, when your anxiety kicks in, you just want to come in. Okay, so boom, here's another example. Okay, boom, impulse, mitigation, and then you see a candle like this, you're like, oh man, buyers are in. Like that's your area of anxiety. This is your point of anxiety. Like most of you, when you see this, you get anxiety, like, oh, I should enter here, this is sniper entry. Boom, you enter, stop loss just below right here. Okay, stop loss below here, and then boom, you get taken out of the trade, and then market, and then you're like, oh damn, what happened? And you're like, okay, no, let me enter here again. I think they're gonna go up from here. Then you enter here again, stop loss below probably here. Boom, hit your stop loss twice. Now already your psychology is messed up. Like, don't even lie to yourself. At this point, your psychology is not intact. Like, you just want to make the money back, or you'll be like, oh no, I'll come back tomorrow. Some of you will be like, I'll come back tomorrow. Some of you have already blown your accounts, and the smart ones just waiting. Okay, so now remember what I said. You need to wait for what? Sign of opposition. Okay, when you get to the low point like this, just place a line. Okay, then the market drops. Then you get another low point like this, just place your line, because like here sellers are still in. Like buyers are not fully committed. Buyers are not even in this market yet. Like they're not even there. Like there's no sign of buyers here. If you buy here, you're really a fool. Excuse me to say that, but you are. Okay, then we had this low now. Okay, this new low. Okay, and then let's see what happened. Boom. Okay, so now that's a sign that buyers are in. Okay, now that's your signal that, okay, these guys are not in. Okay, these guys are not in. But remember, if you have a large account, you can trade this. You can open your trade here, but just remember that your stop loss at that point will be below here. Okay, because remember, price has to come back to the candle that's responsible for that break after the first obstacle. Okay, I'm going to explain all of this in the boot camp. Like, if you want to join the boot camp, join the boot camp. It's an opportunity. It's $20. Like, it's $20. You're not going to get it on YouTube. Okay, and I'm not even forcing anyone. So either you join or not. This is just a gift for me being back. Remember, I was involved in a car accident. This is basically just a gift for me giving back to the community. Okay, so boom. Now, now that's a sign that buyers are coming in. But remember, they have to come back. If you have a large account, yes, that close right there can be your entry, but then you have a large stop loss. But if you want like that sniper, that sweet money, okay, that sweet money entry, you should be waiting, okay, and boom. Okay, you see, price came back and tapped. Actually, the entry for this was not even on M15, it was on M5. Okay, actually, yes. That's the zone that I had marked. Okay, they went up, they decided to come back down, and then you can take your entry by this green candle. Okay, for precise entry in the lower time frame, and I'm not going to give that away for free. Okay, entry, and remember on the previous video, what did I say? Your first target is always your 100% fib zone. In this case, you look at your entry. Your entry is right here. Like, that's zero drawdown. Zero drawdown. Enter, and then the market just flies. Hit your TP. So now imagine if you started here with $10 and you went crazy. 1, 2, 3, 4, 5. This is how you see these guys on Instagram turning $10 to $100 to $200 just by catching entries like this. Okay, boom, boom, TP hit. Okay, guys, so I hope this video spoke to someone. Do not forget to like and subscribe and join my free Discord. There's a lot of gems. I mean, there's a lot of students in there making money now, I understand. So, and if you're interested, really join the bootcamp. Like, sign up for the bootcamp. It starts in 2 weeks. So it starts on the 19th of December. It's going to be running for like 5 days, where I'm going to be breaking down the strategy, market structure, smart money, and all that good stuff. Okay, so guys, thank you guys for tuning in and actually staying until the end of this video, and I hope you learned a lot from this. Go back to your charts, back test, see this for yourself, and then send me a text if you see it. Send me a text if this concept actually starts to sink in with you. Send me a text so we can discuss about it, and I can see what I can do to actually help you. Okay, so thank you a lot for watching this video, and stay profitable, guys. Cheers.